Let's draft a set of financial statements in 5 minutes with Draftworx Cloud. So where do we begin? We begin by adding a new client. So we specify my client name, the type of framework that's applicable. In this example, IFRS SME for companies. The type of assurance engagement is going to be backed by the working papers that we do. In this example, compilation. Ensure that the tax year is correct and add client. Draftworx will then take the credits for the applicable framework and working papers off my balance and create my entity for me. It then jumps us in and we present it with a shortcut list for what we need to complete to get my first draft of financial statements out. So first step is client setup, and client setup is where we store all the information about our client. If there's anything not applicable, such as trading is, leave it out. It won't go through to my financials. And we're going to put in all the information about my client, business address, registration number, place of signature, and again, anything that's not applicable or that you don't wish to go through to the financial statements, just leave it out. Directors, shareholders, if we were doing a different type of entity, this may change accordingly. And then lastly, the number of years to present. Well, if you're doing a standard set of financial statements, you'd have your current and your prior. If you're doing a brand new entity, you'd have 1 year, prior period error 3, or a management style pack with 5. Okay, select that. Let's jump back to startup and we can go into our next step, which is capturing our TB. So capture TB. This is where we're going to import our TB from our accounting packages or from Excel. With Draftworx, we have something fantastic called Sync, which really makes this process super easy to import from the accounting packages that we support, Sage 1, Zero, QBO, Pastel Partner. And with this, not only do we import from the package, but we also allow a pushback export of our journal entries that we pass to the accounting system. And even better is we do something called automatic linking, which does the account classifications for you. So all of this that you had to normally do manually, where we allocate in the accounts to the financial statements, Sync does that for us automatically. Okay, makes life much quicker. So once that is linked, we can jump into our financial statements, and Draftworx is now putting all of our financial statements together. It's auto opening up the correct accounting policies, the notes. Everything goes and gets calculated now. My balance sheet, my income statement, my cash flow. And the first sheet that we see is the results of all these calculations telling us if there's anything out. Okay. In this instance, it's only my PP&E recon that is out, which is going and affecting my cash flow. And we're going to see how we can correct this manual item. And we have our full balance set of financial statements in the next minute or so. Okay. So let's go through and work through my financial statements. Everything is very much Excel-ish. It's not Excel itself, but if you want to do something, think how would I do it in Excel, and 9 times out of 10, it's going to be similar. On my cover sheet, I see my first example of information coming through from my client setup, my company name, my registration number. Trading as is in blue. That means it's not going to print. It's not going to print preview. Why? Because I didn't put in the information in my client setup. Let's move through my management information, director's responsibility, director's report, and then we hit all of our insurance reports. Okay, so our insurance engagement, what type were we doing? We're doing compilation, so we can then go and switch off audit, review, accounting officer, psycho report, and any other pages that are not applicable or that I wish not to print. Okay, moving across my SOFP, again, everything is being calculated automatically. I can jump to note, we'll jump to my lead. Anything in blue is not going to print, not going to print preview. And we simply move forward and we move through our accounting policies. Double check them. If there's anything that's not applicable or needs to be changed, please rectify. Move over to my notes. This is introduction to the blue blocks and my PP&E recon, that amount that was out of my status. If anything needs to be inputted, check the differences. In this case, it is my additions that are missing, because we're required to show the movement in my PP&E according to the standards. Okay. So pop that in to my blue blocks, and the blue blocks are there for a reason. They tell me that there's something that Draftworx can't or shouldn't calculate, so please provide the information. and then we just move on. Everything in white is going to automatically calculate. Everything in blue is not going to print. If there's any more information I'd like, I can expand and add in additional information or additional notes, such as securities provided for bank. Move across. Again, the blue, authorized share capital, maybe 1,000 shares of R1 each. Go ahead and provide information. And the great thing about Draftworx, this is the once off. We only do this in the first year. Okay. Move through. And as soon as I'm happy with everything, hit print preview. There we go. Financial statements in 5 minutes. What Draftworx does here is it combines everything together, justifies the text, removes everything that's not applicable, and we have our first draft set of financial statements. Okay. From here, we can go over to the next process, which is switching things on like your watermark or embedding your letterheads and applying your letterheads, for example, to the compilation report. All of this can be done with Draftworx Cloud and much, much, much more. If at any point in time you need a hand with anything in Draftworx Cloud, you can request a full tutorial session from us, a training session, or hit the blue icon in the top right with a question mark, and you can log a support request. This allows you to ask us a question, ask for help, or you can even download TeamViewer and be able to chat to us in real time. Okay, our team is there waiting to help you. Full team of ex-accountants, ex-auditors, so they'll be able to guide you through the system with in-depth accounting knowledge too. Happiness, download my financial statements, and there's a good introduction to Draftworx Cloud. Hope you enjoy the rest of your day. Take care. Bye-bye.
Good morning, good afternoon, and good evening, ladies and gentlemen, all depending on which part of the world you are joining us from. We are in South Africa. My name is Thando Kuhle-Mioli. I am the acting senior executive within the Audit and Assurance division here at the South African Institute of Chartered Accountants. So welcome to this first workshop on the implementation of the ISSB Quality Management Standards. As most of you are aware, this suite of standards comes into effect in December this year. So that's 15 December 2022. You would hear in most audit technical conversations, you often hear that this year has been dubbed as the year of the QMs, obviously referring to the quality management standards. So these workshops are really aimed at bringing the profession not only in South Africa, but the profession across the African continent together to discuss, to debate, and solve some of the implementation challenges and headaches that you may have relating to the quality management standards. It is really a discussion forum where you can air your views, you can participate in the debates, and really learn from fellow members in the profession. So this event is not just a SAICA event. I guess it's really a collaborative effort between us as the South African Institute of Chartered Accountants, us as well as the Pan-African Federation of Accountants, shortly known as PAFA, as well as obviously involvement from our local audit regulator here in South Africa, the Independent Regulatory Board for Auditors. I would also like to send a short word of appreciation to our sponsor for this event. You've seen that very interactive video. Our sponsor for this event is Draftworx. We really do like to thank them for making this event possible this afternoon. So today we are joined by some very, very important guests. We've got some important guests in our midst. We have our CEO here at SAICA, Mr. Freeman Nomvalo. We have the CEO of PAFA, that's Alta Prinsloo. We also have the Director of Standards at the Independent Regulatory Board for Auditors, Mr. Imran Vanka. But before I hand over to my guests, they will share a short message of welcome with you. But before I hand over to them, I'd like to remind you that this workshop is being recorded. it will also be available on our website as a podcast after the event. Ladies and gentlemen, in the spirit of really managing the quality of this particular event, I will ask that everyone keeps their mics muted, unless I guess you get a specific message from one of our presenters here today who will ask you to unmute. But if you don't receive that message, I do kindly ask you to keep your mics muted for the event. You can keep your mics muted. However, you are more than welcome to post questions on the chat function during the course of the presentation. We may not get to all of the questions, but we'll certainly try to respond to those questions within this particular setting here today. But if not, we'll probably just try to get back to you on some written communication post the event. But most importantly, ladies and gentlemen, do enjoy the workshops. As I said, learn from our expert panelists that we've got. They really have put in a lot of work in preparing for this event here today. Learn from each other, be proactive. I think you've already taken that initial first step of being proactive that is being kind of encouraged in the QM standards, but do engage with the topic at hand. A reminder that today we are looking at the risk assessment process. But before we get into the detail, I would like to hand over to our CEO, Mr. Freeman Nomvalo, just with his welcoming remarks. Freeman, over to you.
Thank you, Thando Kuhle, and good afternoon to SAICA members. Good afternoon to the broader community of the PAFA community. A special welcome to you, Alta. We really appreciate having this collaboration with yourself on this important issue. Imran, I have to make special mention of you, sir. You have challenged us in relation to the issues of the quality of the audits and all of those things. So this workshop is in part a preparation for what is to come, but also a response to the challenge that you have put to us. As Thando Kuhle has already indicated, this is a collaboration between SAICA and PAFA, and to ensure that we create better quality audits across the continent, and by extension, improve the integrity of reporting as well as the trust of the capital markets in our environment. This workshop comes at a time when the profession is experiencing serious questions around the quality of audits, as indicated by the corporate failures that have been experienced, and in most instances unfairly being put at the door of the auditors, or disproportionately being put at the door of the auditors, when in fact the value chain of the governance process in corporates is much broader than that. The first line of defense, which is management and internal processes and their boards of directors, they tend to receive less attention, except only in individual capacity when identifying the specific individuals that would have made big contribution to the corporate failures. So the auditors bear the brunt of the corporate failures, and as a result, that brings about question marks in the area of the quality of the audits that we do. So this standard obviously challenges firms to improve the robustness of their processes, of their monitoring processes, and how they remedy situations when they pick up weaknesses. And of course, ensuring that their organizations embrace a culture that seeks to ensure high quality audits. In that instance, the tone at the top, what the leadership of the firm does or promotes or conducts itself becomes extremely important in how these standards will be embraced by employees and be implemented across the organization. It's easy to come with changes that have to happen in terms of people's behavior, but I think we need to reset the mindset across the board in as far as the audit is concerned. Remember that we earned our license to have our craft, to have our profession secured by legislation in most jurisdictions. Audit is required by law, and therefore it secures a market for us. And I think we earned that as a result of the work we did in protecting public interest, in ensuring that we stand for those that are not closely linked to the daily running of an organization. And I think we need to go back to those days. So I'm saying these standards must be embraced. Engagements today must take us beyond just thinking about these quality standards as a thing that we can then tick on a daily basis and say, okay, we've covered all the bases. It has to be embraced. There has to be a mindset change. I encourage all the delegates to actively participate. There's a process that they can raise questions, take to heart the input that will come from the panelists, who is a very, very distinguished panelist. And I think we will learn a lot from them. And I encourage everybody to participate actively. And it is only through that participation that we can learn. Let's remember that we're not doing this thing because it's nice to get together on an afternoon and talk about these issues. We're doing this because it serves our capital markets. It serves a greater good. It enables that our economies are able to attract investment that is necessary for progress and development in our economies. Without that, we would not be able to have any meaning at all in our lives. So I want us to embrace the discussion and conduct the discussion in a manner that enables us to achieve those objectives. Thando Kuhle, I do not want to spend too much time. Mine was just to welcome everybody and wish you well. I may not be with you throughout the workshop, but I will be logging in later to listen on the discussions that have taken place. I am unfortunately in the audit committee at the moment. I have just taken a short break to welcome you all. Please enjoy the afternoon. Thank you.
Very much, Freeman. I'll hand straight over to the PAFA CEO, Alta Prinsloo. Alta, over to you.
Thank you so much, Thando, and thank you, Freeman. It is so nice seeing you. It's such a wonderful opportunity and privilege for us to be here with you on the platform today. PAFA is the regional organization for the accountancy profession in Africa. We have 56 member organizations in 45 countries. And our focus is strengthening the capacity and the influence of the accountancy profession in Africa. So we really believe in the power of partnerships, particularly the power of partnerships to benefit all in Africa. And this afternoon is an example of that. So I would really like to say thank you, Saika, for this opportunity to collaborate with you on this workshop, as well as the series of workshops. And also thank you for allowing our member organizations to collaborate with you. Of course, we are co-branding, but you also provided the opportunity to professional accountancy organizations in Africa to co-brand, and we had 10 bodies signing up to this initiative. But more importantly, I checked the registration list yesterday, and this workshop drew registrations from 25 countries in Africa, and actually countries outside Africa too. But I quickly want to go through the list of the countries in Africa. We have Algeria, Botswana, Cape Verde, Democratic Republic of the Congo, Eswatini, Ethiopia, Ghana, Kenya, Lesotho, Malawi, Morocco, Mauritius, Mozambique, Namibia, Nigeria, Rwanda, Senegal, Seychelles, Tanzania, the Gambia, Togo, Tunisia, Uganda, Zambia, and Zimbabwe. Isn't that a tour of Africa? 25 countries with us today. I'm encouraging you to stay interested, to follow this series of workshops. The effective date of the standards is only 8 months away. And if there's one thing that I have learned here in Africa is how do we eat an elephant, right? We eat an elephant one bite at a time. And I believe what SAICA and this wonderful committee have been able to achieve is to break this very complex subject into bite-sized pieces. And when you look at the program that PAFA distributed for this event and the future workshops, you will see how well they did in actually also linking it to already available material. Because through the IAASB and IFAC, there is already a lot available, but it can be a little bit overwhelming as to how to navigate it. So keep your eye on the program. It really categorizes all what is already available in an easy to access and digested way. And again, stay interested. I'll see you at the end of December once we have navigated through all of this. Thank you so much to our panel. I have been able earlier in the year to participate in one of their committee meetings, and they are excellent. They are absolutely experts. So I'm leaving you in their expert hands. Thank you again for this wonderful opportunity.
For those words. So you heard it, ladies and gentlemen. Stay interested. We've got really some very diverse views that we can get from this workshop, given the countries that are represented, given the firms that are represented. But let me take over the spotlight. Imran, over to you.
Anna Gushlek, thank you very much. Tanagusha, good afternoon and thank you very much. I really am grateful to Alta and Freeman for setting the tone for this workshop this afternoon. They've both spoken about challenge. I think we're going to hear a lot more about opportunity as the workshop progresses. Firstly, thank you for inviting the Independent Regulatory Board for Auditors to be part of this series hosted by yourselves and PAFA. It is a real honor for me. The reason it's an honor for me is that I've been involved in the project for about 7 years as Standards Director of the IRBA and of course as an IAASB member. I chaired the project that developed the new QM2 standard, and I had the pleasure about a year ago to vote for the adoption globally of all 3 standards. These standards are a very significant event in the life of our profession. They were designed by the profession for the profession. They are probably a once-in-a-decade opportunity for the profession to make the kind of investments and decisions that will create a major change in how our firms are run. They will result in a big improvement in audit quality, and ultimately, they will improve inspection results, they will help to restore investor confidence, and indeed, public confidence will be improved. But if we get it wrong, or if we get it only partly right, we may all be missing the opportunity of our careers. I'm really pleased that these workshops are starting today. We're also pleased that SAICA is hosting them virtually, which makes them really easily accessible. And I want to thank SAICA for hosting and taking the lead with this important initiative. The IRBA supports this initiative, and we encourage practitioners and we encourage their staff to attend all the workshops. We really also appreciate the presenters that you've lined up, and they certainly are knowledgeable. They've been with us on these projects since the start of the journey, and they're well positioned to make these presentations. But just a qualifier, the presenters speak for themselves and not for the IRBA, who is the audit regulator. We don't know what they will say or what opinions they will express. So please don't hold the IRBA later on to the things that the presenters may say today or over the life of these workshops. That said, we at the IRBA are responsible for issuing auditing standards. We are the custodian of the auditing standards in South Africa, and we're pleased to see so many of our sister regulators and standard setters join on this workshop today. The board in South Africa issued these standards on the 18th of March last year. At that time, we thought it was a long way away before they would become effective. Today, on the 7th of April, we are now only 252 days away from the effective date. Only 252 days before they become effective. And when we adopted these standards, our CEO said at the time, he said that these standards are set to have a major impact in strengthening audit firm quality management and thereby strengthening the foundation of audit quality. And this theme of foundation has been around for a while. When the ISSB chairman, Arnold Schulder, visited South Africa and he heard about the challenges we were facing, he showed us a house. And he described that house as the house of audit. And he said that the house was cracking and it was incomplete in some places. And he told us that if we fix the foundation, then we could build a stronger, more useful, and more beautiful house. He then described these QM standards for us as being the foundation of the entire house of audit. And so if you'd like to imagine what you're doing over the remaining life of these workshops is investing in how to rebuild the foundation of audit. But while these workshops may be starting today, we've learned a little bit over the last few months speaking to practitioners and firms, and I want to just share those 3 or 4 points. The first of those is that about a third of all firms in South Africa had not yet started their projects. I hope today's event marks the start where the balance of those firms come on board. The second thing we learned is that the best day to start implementing your project is today. So don't cry over the months that have gone by. You have great experts to lead you on this discussion today. Let's put our hats on and decide we're going to start right now. The third thing is that we have learned from everyone, CEOs of network firms to technical experts, that those who have started implementing this project have learned to improve the structure and decision-making processes of their firms. In other words, QM adds value beyond the technical value that it has been designed to provide. And lastly, everyone tells me that there is much in the standard that may seem very ordinary because we're accountants, but on a deeper scrutiny, you will understand that there are very significant implications in the choice of language and the descriptions in the requirements. And for that reason, these deep dive workshops are so very important. With those few words, Thanda Gushle, I'll hand back to you and wish you well.
Thank you very much, Imran. Ladies and gentlemen, let's get to it. I do believe that you would have received a pack as part of the registration link email that you got as well. So in that pack, you would have received a working paper that hopefully that working paper you don't only use today, but throughout the life of the workshops, you will continue to use that working paper. You also received a few slide decks, which some of them we will share during our presentation today. So let's kind of briefly talk through where we are before I introduce my panel. Just confirm if you can see the slides on your side. Okay, there we go. First of all, I just want to highlight some of the resources that we've got. On the slide there, you also see that there is a link to all of those resources. So we've got obviously the final pronouncements, being the ISQM1, the implementation guides that have been released and published by the IAASB. For you to get access to all of those documents, please do visit our website. What we've also got is a webinar series from the IAASB in terms of the 4-part webinar that they ran last year. And again, different topics. So you'll see that the first session that we have here today really does align to their first series webinar that they had in that series around risk management, risk assessment process. So all of those webinars you can also get via our website, or if you want, you can go directly to the IAASB website as well. And then what we've got is a tech talk session. So as SAICA, we run what we call monthly tech talks, where we really pick some topics and begin to kind of dissect and explain to our members and educate our members on. So we did initially have a tech talk session on the quality management standards last year. Fortunately, there's not, you won't see any new faces when you look at that tech talk session, because it will be Joanne, it will be Jean, it will as well be Michelle, who was facilitating that discussion. So do listen to that discussion. I think it kind of gives you a nice introductory flavor to the ISQM standards. And then we also have a link to the IRBA website. So Imran earlier this year ran a launch of the quality management standard. So that link is really also available on our website as well. Very useful discussion to listen to, panel of experts that we had there, different firms represented. We also have the IAASB. So do make use of those resources that we've got. But today, ladies and gentlemen, so our topic today, we're obviously looking at ISQM1. And you'll remember that, I mean, if you look at the predecessor standard, we had 6 elements there in the ISQC1. And obviously with the revisions that have been made to ISQM1, we now have eight components. So today we'll actually be looking at one of those components, which is the firm's risk assessment process. And I don't want to really get into the detail of that, just looking at the time as well. But what I think is important to highlight is the fact that the standard kind of gives requirements for firms to establish quality objectives. A lot of these quality objectives have actually been included in the standard itself. So once you've actually developed those quality objectives and also included any additional quality objectives that you feel are necessary within your particular firm environment, you then have to go back and identify and assess the quality risks. And this is really around what could prevent us as a firm from achieving those quality objectives that we've established. And once you've identified those quality risks, you then have to go back and design and implement responses to those risks. So in a very high level, that's what our panelists will be talking through to you this afternoon. But a few important points that we also want to highlight. I think for me, the one important point is that do not throw away everything that you know from ISQC1. There's a lot that you can actually carry over to when as you implement your risk assessment process in alignment with the requirements of ISQM1. So do not throw away what you've learned and what you've been doing from the ISQC1 standard. So a lot of, I guess, a lot of those processes, a lot of those controls, you can actually transfer into your new ISQM1 manuals. But most importantly, from my side as well, is consider this as a fresh opportunity, just to kind of relook at your risk assessment process, to actually kind of rethink some of the risks that you might be facing as an audit firm, and really just begin to kind of look at it at a very strategic level in terms of what some of the issues that you do need to consider, some of the risk responses that you might need to develop. But I won't get into the details on a very high level. That's just some of the workshops that you can look forward to in the future, and really unpacking some of those elements within the new ISQM1 standard. But that has been shared. We will continue to share that in the future as well, and also keep you updated of any changes that may be taking place in our program. So we will be using Slido today. And really what I want us to do right now is just to kind of test Slido so that you can begin to kind of get familiar with the software that we'll be using. So what we'll be doing through Slido is really posing some of the questions and then allowing you an opportunity to respond via that platform. All right, so I guess the first question, Charlie, if you can just pop up that first question for us. The first question is really around which country are you attending from this afternoon? So as you can see there, where are you from? And I'm already seeing some responses coming through. We've got Mauritius, we've got South Africa, we've got Zimbabwe, another South African, Botswana, Lesotho, and as Alta had really indicated, we are from all over the continent and different parts of the other continents as well this afternoon. So Uganda, Ethiopia. All right. And then we can move on to the second question that we've got. The second question is really an open-ended question that we want your response on. And the open-ended question, Charlie, if you can share that with us. And then, as you can see, how is the weather today? I'm seeing that it's hot at some places, cool and sunny, cloudy in Eswatini, warm, cloudy. So again, a very mixed bag of weather conditions that we've got. So ladies and gentlemen, I hope that does give you a bit of familiarity with the Slido platform. And just a reminder that when the questions do pop up, do make use of that platform to respond. So without further ado, let me just introduce my panel to you this afternoon. So first up, I've got Jean Viljoen. Jean is a senior manager at Mazars. She works in the Quality and Risk Management department and is responsible for non-assurance services. Jean, good afternoon and welcome.
Thanks, Tandu.
Next up, we've got Mari Baragwanath. So Mari is the head of quality control at SNG Grant Thornton, also based here in South Africa. Mari, good afternoon.
Hello, Tanu. Good afternoon, colleagues.
And then we've got Joanne Schroeder. Joanne is an independent audit quality consultant, our previous chair here at SAICA on our Assurance Guidance Committee. Joanne, good afternoon.
Good afternoon, Tandu and everybody else.
Thank you very much. And then last but not least is a colleague of mine from SAICA who I would really kind of convey my appreciation for setting up this discussion forum. She's been very heavily involved in kind of stressing in terms of making sure that everything runs smoothly today. And that's our project manager in audit and assurance. And that's Michelle Vermeulen. Hi, Michelle.
Hi, Tando. Thank you very much, and only a pleasure.
Thank you very much. And then I'll hand over to our panelists and handing over to Mari to kick us off today. So over to you.
Thank you so much, Tandu. Good afternoon again, colleagues. Let me just get my slides up for you, then I'll start sharing my screen. All right. So I have the privilege this afternoon to illustrate to you how the risk assessment process fits into the house of quality. Firstly, as Tandu has also highlighted to you, there's three parts to our risk assessment process. Firstly, to establish our quality objectives. What does the firm need to achieve in order to consistently manage the quality of its engagements? Then secondly, to identify and assess the quality risks. What could go wrong in achieving those objectives, those first objectives that he spoke about? Then number three, designing and implementing responses. This is the controls the firm puts in place to address the quality risks. So those are our three main components when we are doing our firm's risk assessment. Then you can see our little bubbles and our circle is doing a nice cycle for us. This is because the system of quality management is a continuous process, starting with the objectives, identifying risks, and formulating responses to those risks. You can see the first three bubbles there. You will continue to identify deficiencies in your system of quality management, which will require you to update your responses or even add to your existing quality risks as you become more aware of quality risks that impact your firm, as the types of clients that you are doing might change, or the nature of the work that you are doing might change. For example, you will be doing assurance work and then your line of work will only change to advisory. So there's a continual difference in your environment that you have to take into account when doing your risk assessment. The next step in our cycle is to implement the responses to address the quality risks and thereby ensuring that you achieve your firm's quality objectives. After implementation, you are required to monitor, you can see our monitoring bubble there, to monitor the implementation and ensure that your responses to your quality risks are adequately designed, implemented, and that the deficiencies are remediated on a timely basis. This is a big step forward from our traditional ISQC1, which Thando spoke about earlier, which was more compliance-based, and Imran spoke about a tick box exercise. We're not ticking boxes anymore. We are focusing purely on risks. Therefore, the standard of quality management is necessary as it is the mechanism that creates an environment that enables and support engagement teams in performing quality engagements. Now, if you're thinking about risk assessment and we're speaking about the system of quality management and our quality objectives, then you ask yourself, where do I find these risks? What is a risk to my firm? Well, firstly, you can look at your firm's own processes, your own monitoring and your own remediation processes, whether you're calling it a IQCR, an internal firm review, or just a review of your files. You will have findings that you already know about that can give you your own risks to identify. Then secondly, information if you're part of a network or from service providers. If you use service providers, they bring their own challenges and their own risks to the table, which you should also include in your risk assessment. Then thirdly, results of monitoring activities from the network or the regulator. This is external type of risks that needs to be evaluated. If, like the regulator in South Africa is the IRBA, if you have any findings or things that come up that they highlight to you, that is a good source of information to get your risks from. Then we have complaints and allegations, regulatory actions, litigation, your own firm's risk register. Every firm's got a risk register. You might only have business risks. Business risks might not be quality risks, but you can surely identify quality risks from some business risks, depending on what it is. And then also subsectors, which will bring specific risks to your risk register. In undertaking the risk identification and assessment, the firm is required to understand conditions, events, circumstances, actions, or inactions that could adversely affect the achievement of quality objectives. In other words, what are the things that could happen or could not happen that could affect the achievement of these quality objectives? Now, if you look at the 8 blocks that we have there, the complexity and operating characteristics of the firm, strategic and operational decisions, actions, business process, and business model of the firm, the characteristics and the management style of leadership. If you're a sole practitioner, or you're a medium-sized firm, if you're a big firm, that will have an impact. The resources, laws, regulation, professional standards, the environment. So all of these things you need to have a good understanding before you are formulating your risks. Now, if we get to how, so the assessment of quality risks need not compromise of formal ratings or scores like we are doing on this slide, but it is, however, very helpful to use this type of a matrix in your risk assessments. Firstly, take factors into account that might be a possibility of occurring in your firm. You will see there are possibility of occurrence in our little block. Then you will decide what the significance of the effect will be if this risk is not addressed. Then you will get to be calculating your matrix. Where would your responses lie? The degree to which the risk may adversely affect the achievement of a quality objective may vary based on several factors. So this is how you decide 1, 2, 3, or 4. The following should be considered in your risk assessment when determining your possibility of occurrence as well as the significance thereof. Firstly, how would this risk affect the achievement of my quality objective? Then, how frequent does this risk occur? And thirdly, in what time frame should we respond to this risk? So that will help you decide, am I using a 1, 2, 3, 4, and then you will get to high, medium, and low. It's important to note when you do your risk assessment that you should assess your risk as inherent risks. taking no controls in place, no policies and procedures in place. So it will not influence how you are assessing your risks. Then lastly, if we look at, you have now decided what your risk rating is. Now you say, okay, I have a low risk, then you have no response needed. But this needs to be documented in your system of quality management. You will have to decide which ones are low risk, and you have to document that you are not responding to these. You do not need a formal policy or procedure. With a medium risk, you can determine with your own judgment if you need a formal response or informal response. But again, you have to document this in your system of quality management. Then if you have a high risk, it's a significant risk, however the terminology you would want to use, but then you need a specific formal response, and that will require you to incorporate formal policies and procedures for your system of quality management. I hope that gives you a theoretical overview of what we are doing with our risk assessment, but I'm going to hand over to our panel for further discussion. Thank you, Michelle.
Thank you, Marie. Q&A, in the context of the overview just given by Marie, who has the operational responsibility for the system of quality management within an organization?
Sorry, Michelle, just give me a second. Oh. So. Sorry, Michelle. Each firm will have to identify who would be the best person to take the operational responsibility for the system in their circumstances. So in larger firms, there'll probably be a dedicated quality manager, technical partner, or someone that may be taking the operational responsibility for the system. In smaller firms, however, this responsibility can be taken by one of the partners or the directors in the firm, or even a manager if they do not have a dedicated quality manager. What is critical, though, is that the person who is assigned the responsibility must have the necessary knowledge and understanding of the requirements of the standard. He or she must also have sufficient time available and the required influence and authority within the firm in order to effectively execute their responsibility. It is therefore practically possible that this person, if they are a fee-earning staff member, may not be able to take a full client portfolio, practically just due to the time and the effort that is required in order to design, implement, and then operate this system of quality management.
So, Jean, what are the roles of the different parties within the organization relating to the risk assessment process?
Thanks, Michelle. So I just want to kind of unpack firstly the different roles that's identified within the standard. So firstly, we have either those individuals that assigned ultimate responsibility and accountability for our system of quality management. Then we have those operational responsibility for the system of quality management, like Q&A mentioned. And then we have also those individual that's operational responsibility for the compliance of the independence requirements, as well as the monitoring and remediation process. So all of these has been assigned different responsibilities and are required to have the appropriate knowledge, experience, influence, and authority within the firm, and of course, sufficient time to perform all their assigned responsibilities. And this Yone alluded to as well. The standard, however, goes further and indicates that the firm may assign further roles, procedures, tasks, or actions to other individuals to assist those individuals that have been assigned these responsibilities. So keeping in mind that ISMQ 1 promotes integrating quality management into the culture of the firm's strategy, operational activities, and business processes, it's not only one or two individuals that are affected, but actually the whole firm. So considering that the firm's risk assessment process is a process that's used to establish the quality objectives, identify, assess the quality risks, design and implement responses, and this was Marie mentioned, and that risk process applies to all the components within the ISMQ 1 standard, except for monitoring and remediation, it really shows that it's not a standalone process. So it does not only affect the professional services, it also affects other areas within the firm. And I can think of an example, and that would be human resources. Thanks, Michelle.
Thank you, Jean. But Marie, how is this to be implemented in a small practice with very limited resources?
Thanks, Michelle. Scalability will depend on the nature and circumstances of the firm, as well as the engagement performed by the firm. A firm with limited resources will have a less complex and informal system of quality management. For example, the person with the ultimate responsibility and accountability for the system of quality management may be assigned to a single partner or a sole practitioner with the sole responsibility.
We can't hear you.
Unmute, please.
Maury, hello.
Hello, am I on mute?
You are on mute, yes. Welcome back.
Wow. Shall I start from the beginning?
Please do.
The scalability. The scalability will depend on the nature, circumstance of the firm, as well as the engagement performed by the firm. A firm with limited resources will have a less complex and informal system of quality management. For example, the person with ultimate responsibility, accountability for the system of quality management may be assigned to a single partner or sole practitioner with sole responsibility for the oversight of the firm. The individual may also assume responsibility for all aspects of the system of quality management, including operational responsibility for the system of quality management, compliance with independence requirements, and the monitoring and remediation process. Furthermore, the documentation of the quality objectives, the quality risks, and responses may be less extensive than for a more complex firm. For example, a big firm may have brand new software to document their system of quality management, or you may have several Excel documents if you're trying to do it manually, or you can just have a single document to document your system of quality management on.
Thank you, Marie. That sure is good to know. But John, what are the sources of information for purposes of this risk assessment process?
Thanks, Michelle. So this was actually mentioned during Marie's presentation. I think it's a very important question. So given the proactive and the continual approach to manage the quality and the information the firm uses to establish the quality objectives, identify and assess these risks, design and implement responses, the information that the firm uses for the system of quality itself can include about two things. This is information generated from the information and communications component, which may originate from either internal or external sources. We are going to unpack a little bit more the information and communication component during another workshop, so I'm not going to elaborate on that part. And then also the results of the firm's monitoring and remediation process. So application material in the standard, and a little bit be a technical dunk in that sense, actually provides examples of the sources of the information a firm may use in its risk assessment process. So some examples is the results of external inspections, information regarding your complaints and allegations about failures to perform in accordance with the professional standards, information from regulators, for example, from regulated industries or from the audit regulator as such, and also then changes in the system of quality management that affect other aspects of the system. Again, it's not, the components are not individual, they're interlinked with each other. So an example would be, for example, if you look at the firm's resources, it won't only impact that component, but the others as well. Thanks, Michelle.
Great. So now that we know where to obtain the information from, UNA, how do you assess risks?
Michelle, In assessing the identified risks, the firm must consider two elements, and those are the possibility or the likelihood that a risk could occur, or then the possible impact that this risk will negatively affect the achievement of the quality objectives. And Marie also referred to that in her presentation. In combining these two considerations, the level of risk is then assessed. Now, the firm must choose a threshold above which these risks would be considered quality risks. Now, that's a defined term. These assessed quality risks will require responses in the form of either policies or procedures or both that will then address the quality risks. If you consider all the components of a system that must be considered, I'm sure you'll agree with me that one person cannot do that assessment in isolation. You'll need to involve all the parties in the firm that are responsible for all the different operations, such as, for example, HR, your learning and development or training department, your finance, IT, and a variety of other staff members. In a smaller firm, this will certainly involve less people than in a larger firm, but it is unlikely that one person will be able to assess all of these risks without consulting with anybody, without consulting with anyone else in the firm.
That's interesting, Yone, but I've got a follow-up question for you. How granular or how detailed does your risk assessment need to be?
Yeah, that's a very common question. So in the risk assessment process, a firm can identify endless risks that can adversely affect the achievement of the quality objectives. And once you start, you could possibly feel like you are going down a rabbit's hole. So we need to bear in mind that not all of the risks have to be considered quality risks. Remember, we said there's that threshold that you will assess. And it is also not practicable for a firm to identify and assess every single possible risk and to then design responses to every one of those. The firm must rather focus on the risks that have the greatest impact on achieving quality objectives so that those risks are then appropriately addressed by the firm. Remember that although you will also identify business risks and possible other risks, those should be listed separately and addressed as part of your business risk assessment process, and therefore doesn't have to be, and possibly might not even make sense to be included in your quality risk registers. It is, however, important to document all of the risks that are identified and then to assess these quality risks. So only once you've assessed a risk as not being a quality risk, so you'll document all your risks, you will assess all of them, and then only if that risk is not assessed as a quality risk, only then can you say that you don't need to respond to that risk. And of course, then you've got the documentation with that.
That leads me to my next question, Marie. When are you done? When do you stop this risk assessment process?
Thanks, Michelle. Let me just make sure I'm unmuted this time. Sorry about that. So when do we stop, are you asking? Well, given the evolving nature of the system of quality management, the responses, design, and implementation by the firm may give rise to conditions, events, and circumstances, actions, or maybe inactions that result in further quality risks. For example, the firm may implement a resource, like a technological resource, to address a quality risk. And then quality risks may arise from the use of such a resource. Therefore, this process will continue, and your risk register or the documentation that you will be using are live documents. In stating that this is a live document, you should consider your quality risks as and when they occur. Firms should not wait for annual risk assessment of their system of quality management to update these quality risks.
Jean, Marie has just referred to live documentation. So what is required to be documented in terms of the standard?
Thanks, Michelle. That's very important. So the standard obviously requires the firm to prepare documentation on its system of quality management that is sufficient. So what does that mean? So it means three things. First is need to support a consistent understanding of the system of quality management by personnel, including the understanding of the roles and responsibilities with respect of the system of quality management and the performance of engagement. Secondly, it supports the consistent implementation and operation of the responses. And then thirdly, provide the evidence of the design, implementation, and operation of the responses to support the evaluation of the system of quality management by the individuals assigned the ultimate responsibility and accountability for the system of quality management. To prepare, in preparing the documentation, the firm is required to include three things. So firstly, the identity of the individuals assigned the ultimate responsibility and accountability for the system of quality management, as well as the operational responsibility of the system, like we've mentioned a few times. The second one is the firm's quality objectives and quality risks. And the third one is a description of the responses and how the firm's responses address the quality risks. So in documenting how the firm responses addresses the quality risk, the firm may document the reasons for the assessment given to the quality risks. So this is where Marie mentioned during her presentation that you assign a rating, either high, medium, and low, giving 1, 2, and 3 ratings. However, the standard does say that the assessment of quality risk need not comprise of formal ratings or score, although the firm are not precluded from using them. So it depends on your firm and how you would rate those ratings or rate those risks, that what you would implement within and how you would document that. And again, documenting what level you've assessed is very important. So there are, however, specific documentation requirements regarding monitoring and remediation. And again, I'm not going to talk about that. That's what we deal with during the monitoring and remediation process workshop. So the firm is not required to document the consideration for every condition, event, circumstance, action, or inaction. And we've mentioned this already during our discussion. And that's for each quality objective and each risk that arises. However, the granularity and the form of documentation of the quality objectives, risks, responses may assist the firm in identifying and evaluating those deficiencies, including investigating the root causes of their deficiencies. So if the documentation is clear, it may enable the firm to identify where the deficiencies have arisen and how they affect the achievement of the related quality objectives, the severity and pervasiveness of the deficiency, and the remedial action needed to address the deficiency. So what another nice thing about the documentation and how you document it, it can also be used for training your personnel and engagement team, ensuring the retention of the organizational knowledge and providing history for the basis of decisions made about the firm's system of quality management. So the question you might ask is, what form should this documentation take on? So it can be a formal written document, for example, written manuals, checklists, manual forms. It can even be informally documented, for example, in emails, IT applications, or other digital forms. Very important again, the nature and complexity of the firm, its engagement and frequency and extent of the changes to the firm's system of quality management will dictate how often these documents will need to be updated. Thanks, Michelle.
Thank you, John. And a very big thank you to all of our panel members for sharing your insights with us this afternoon. We're now going to move on to a slider question again, namely, what are your biggest concerns or challenges around the implementation of the system of quality management? Now, your answers are very important to us. Why? Because we're going to use these answers in developing our coming workshops. We're also going to use these answers as a basis for developing a frequently asked questions. So I'm going to give you a minute or two now just to think about it and also to type in your answers. So I've got time to do this is a challenge. Yes, we know it's only 8 months left. Documentation around it, enough resources. Differing interpretations, yes. The cost, communication, where to start. Overregulation. Who would be responsible for doing what? Very good question. How to apply scalability properly. I also have some responses in the chat side. Skills. Understanding all of this. The tone at the top. Okay, great. You can still continue giving us your answers. I'm going to move on to the third part of today's workshop, where I'm going to just take you through the working paper that we've shared with you before this workshop. So just give me a moment while I share my screen. Right, so the purpose of this workshop is to help you with the risk assessment process. And for this purpose, we've developed a working paper to help you to frame your objectives, your risks, and your responses. So the idea is that you don't only use this working paper today, but actually for the rest of the year and also for all of the coming workshops. Now let's have a look at the different columns. The first column is where you'll state your quality objective. Now ISMQ 1 gives us a number of quality objectives that are compulsory, that the firm needs to achieve. And those I've already included in the working paper. So you'll see I've pre-populated the working paper with those quality objectives as per ISMQ 1 for the different components. Our next column is then where we identify the risks. Now, how do we define a risk? A risk will be anything that can possibly prevent you from achieving your quality objective. That's a risk. And it's very important that you document the risk or the risks in a clear and consistent manner. Now that we've identified the risks, the next logical step is to assess the risk. And as we've said before, you need to assess this risk in the absence of controls. So for those of you who perform audits, that's very similar to assessing an inherent risk. So we disregard any controls in the firm and say, okay, what is the possibility of this risk occurring? Low, medium, or high? And secondly, what can be the significance of the effect of this risk occurring? Low, medium, or high? Then combining those two answers will give us our next column, the level of risk then being either low, medium, or high. Why is that important? Because if you determine the level of risk to be low, you're not required to develop a response. If the level of risk is medium, you'll have to apply your professional judgment whether a response is required or not. And then, of course, if the level of risk is high, it's a no-brainer. You definitely need a response to address that risk. Now, like Thando has said before, we've got good news. Okay, it's not necessary to throw out the baby with the bathwater. Okay, when looking at a response, evaluate your current policies and procedures and see whether there isn't an existing control or controls in place that already address that risk. Then Bob's your uncle. However, if there are no such controls or they do not sufficiently reduce that risk or address that risk, you will either have to add a new control or an additional control. It's also important that you appoint an owner for that specific response or control. So that person will be responsible for implementing that control and making sure it operates effectively. The link to the relevant policy and procedure, okay, so if that response or that control is already contained in an existing policy, procedure, or document, cool, you can just link it there. If it's an informal or it's a new control, it's not yet contained in any document, then you have to decide, okay, where am I going to include it, in which policy, in which procedure, or which document, and then you can add the link there. The last column I said other, because really that's space for you to document anything else that you think might be useful for you in your firm relating to that response or that control. And I've included in there a couple of examples. It's also included at the bottom of your working paper. It could be the resources that are required for that specific response. For example, you might need to invest in a program, a software program, or you need to involve experts. Also, you can document the frequency of that control. It could be a daily control, monthly, weekly control, annual control. You can document whether it's an automated or a manual control, preventative or detective control, what the date of implementation was for that specific control, and also the monitoring of that control. Now, giving you an overview of this working paper, I think the next logical step is for us to go through an example or two. And for that purpose, I'm going to hand over back to Ioane. Thank you, Ioane.
Thanks, Michelle. Now, the working paper that Michelle showed us already contains the standard mandatory objectives for firms to consider and use. So that's exceptionally helpful. Thank you, Michelle. It is important, though, to note that the risk assessment and the monitoring components do not have any objectives prescribed by the standard. The objectives and the related risks and the responses for the components of the governance and leadership, ethics, resources, and all the other components will be addressed in the remainder of the sessions that we are planning for the series. So in order to illustrate the firm's risk assessment process, but without getting ahead of ourselves, we have set our own objective for the firm's risk assessment process. It is also possible for a firm to address the risks related to this component under other components, should you wish to. But of course, you are allowed to identify additional objectives, and that's what we've done. The objective that we have stated for the purpose of today's walkthrough of this process is therefore to establish quality objectives and identify, assess, and respond to risks in order to achieve quality objectives as required by ISMQ 1, the standard. Right, so using Slido once again, we want to ask you, what are the potential risks that you identify that would specifically relate to this objective? In other words, and the question or the objective will also appear on the slide, a question there. Jot down for us, what do you think for your firm specifically? Bear in mind, we have sole proprietors all the way through to bigger firms. What would you think could be a risk with this objective? So establishing quality objectives and identifying, assessing, and responding to risks in order to achieve quality objectives as required by the standard. You can use one-worded responses, or you can even include some sentences. But I'm going to give you some time to think about this, because we're going to take one or two of these risks and walk through the process in terms of then going and assessing the risk and designing responses. Only one practitioner in the firm to do, I want to include all of the work. Understanding your entity or not properly understanding your entity. That responses are not appropriately designed and implemented to address the identified quality risks. Constraints and resources. Understanding strategy, not enough consultation. There are a lot of them coming through. Please keep them coming. Not understanding the quality standards is one that I have on the chats. the subject matter is not yet embraced. Time, resources, a number of them. Right, so let's select 2 of those risks, and then we will walk through the process. Marie, let's use the one, the design of the risk assessment process is not responsive to the firm's structure or organization. I'll hand over to Marie to then take us through this. Now, don't close your Slido just yet, because we are going to use Slido while we walk through the process. Thanks, Marie.
Thanks, Ioane. Yes, there are a lot of risks coming through on that Slido. If we take the one that is the design of this risk assessment process is not responsive to the firm's structure organization. Yeah, let's unpack that one a bit, because we are talking about risk assessment as a component. You have to do a risk assessment on the risk component. So that is what we are busy with. So let's look at the possibility of that risk occurring. We need to take to our next Slido. Let's work together and decide, is it going to be high, medium, or low? This will impact, do you have a small organization? Do you have a big organization? Do you have committees to report? Do you have risk committees, quality committees, excos? Those type of things will definitely influence your answer. I see a lot of highs coming through. Right, so you're thinking about this risk. What if this risk is occurring? Remember to assess these with not taking into account what policies and procedures or structures you have in place. So we're saying, okay, this is high. The possibility of this risk occurring in our organization is high. Now, the second thing to think about, what is the significance of the effect? If this risk occurs, what will be the significance of it on your firm? Let's go to the next slide. And then we decide on high, medium, or low. This will be how you approach your risk assessment working paper. And this will also how you do your risk workshops with your leadership. You will ask them the same thing, possibility of occurrence for next, and then next the significance of the effect. Will this have a significant effect on my firm? If I'm a sole practitioner, what will be the significance on my firm? Or if I'm at a big firm? Yes, I will have to have my structure in place, and the risk should be responsive to my firm structure. So that's something big to then think about. All right, I see everyone saying high again. We're getting a very big high. Yes, we're certainly taking these risks into account. If you would have thought about what you already have in place in your firm, you would say, I do have things in place, low, but this is how you should approach your risk assessment. Then next, we will decide on the level of risk. Now, on the next slide, you can make your own conclusion as to our occurrence and our significance. But here you will just formulate your own responses, whether you're going to be also have a high, medium, or low. And this answer on this slide will determine your response. Yes, I see nice responses coming through. Involve all your parties in your risk assessment. To identify all your component owners are very, very important. To have leadership involvement, the tone from the top is very important when you do a risk assessment. If you are the operational person responsible for the implementation of the system of quality management, you can't sit alone at your desk and make these decisions for the firm. You have to involve everyone in the firm and get everyone's input on how these risks are affecting them, even on the ground level. I think this is very good. Thank you so much for your participation. I think we are getting the grasp on how to do our risk assessment in our firms to go forward, because the risk assessment is involved in every process, but you have to do a risk assessment of your risk process before you start. So let's move on to the next one. I'm going to hand over to John.
Thank you very much, Marie. So the second risk that we are looking at is the responses are not appropriately designed and implemented. So we're not yet with the Slido question. So the second risk, like I said, is responses are not appropriately designed and implemented to address identified quality risks. So to recap again, the quality objective that we're looking at is to establish quality objectives and identify them, assess and respond to achieve that as achieved within the ISMQ1. So next step would be to kind of do that on the possibility. And I see you guys are very, very proactive and already rating this kind of risk within your organization. I'm going to re-emphasize the fact that this is the inherent risk, not taking in consideration what we already have in place, what is the possibility of this risk occurring in your organization. And very much I see it coming up high and medium, the top two. And if you kind of consider if it's a first time that we do our risk assessment of our firm in such a way. So it is kind of logical that this would kind of be medium to high. But again, it would depend with the size of your firm. Okay, so going on to the next slide question, doing the exercise again on what is the significance of the effect of the risk occurring in your organization. I'm reading again, you can see responses are not appropriately designed, implemented to address identified quality risks. Again, seems like high is very much in that sense. What is the risk if it's not the significance of the effect if these responses are not designed and implemented to address the quality risks? And if this is very high, the impact of you as a firm, it also depends on the type of engagements that you have within your firm on what you would rate that. Okay, seeing a lot of answers coming on through the chat as well, and also around the platform. Do encourage you to use the platform to get your responses to record it in such a way. Okay. So considering that and keeping in the back of our minds the working paper that Michelle did for us is to kind of identify the level of the risk, and that is multiplying the possibility of the occurrence and significance of the effect and kind of determining that level. And looking at that, we are going to the next question on Slido is, how would you capture I would like you to capture the detail of the possible responses that you would have in your organization to address this risks. Again, if these risks are not very material, if you've got your overall level and said, well, it's not material, there would not be specific responses, but like you and I already mentioned, and I think Marie also, is that if there is of such as an effect and it's rated as high, you are required to provide a response. So please use that and give me some options through some of your possible responses to address the risks in your organization. So kind of thinking of the process and how would you get to approve those responses, how you would implement it, how would you monitoring that? I see walk through and early monitoring, regular monitoring and remediation. So obviously that's where your other components come into play that you kind of can see. It's kind of this iterative process in essence with this risk assessment process overarching again. To redesign and implement and monitor the progress step by step, communication. So I absolutely love the fact that you're giving all these lovely responses to us. And I do hope that this helps you with how to complete the working paper that was shared with you, how do you go through the thought process of identifying those quality objectives as well as the quality risks, and then rating them and kind of the applicable responses and who's the owner and all of those other things that you would like to capture within your working paper. So now that we've worked through the two examples of how to establish them, the objective, the risks and the responses, Yone, can you maybe tell what one should do for next steps?
Yes, absolutely, Jean. And I think, first of all, based on the responses in the chats and the concerns raised, I think the first step probably is to engage with all the resources that we've included in the slides that Tandu spoke about. So that's certainly the first point. But then secondly, engaging with the process, identifying your risks, identifying your responses and developing them. And then to do internal firm training and awareness at the ground level about how are our policies changing? How are our procedures changing? What is going to change on a day-to-day basis? So that's after the process or the system has been developed. What to then actually train people on the fact that the system is changing. Change management, very, very big part of this, to get people's buy-in, holding people's hands while they are implementing the new processes and policies, driving this change from the top, extremely important in order to successfully implement the new system. And then to identify any deficiencies in the system and to evaluate that. Now, of course, that only really has to happen within the first year of the implementation, but it is an interactive and continuous process. Marie also referred to it earlier on. So there are live risk registers, and one can already start identifying those deficiencies and start addressing them as well. And then again, monitoring and remediation. We will be having another session in 2023, early next year, to then say, right, after having designed my system, having the system implemented, how do I then go about monitoring and remediating any of the processes or any of the deficiencies that I do identify? So lots of work, and it's certainly not going to come to a halt come 15 December 2022. But yeah, definitely lots of work to do. I'll hand over to Tandu now to take us through the next stage.
Had a bit of connection issues there, but I'm back. So we've been capturing some of your questions that you've had on the chat as well. So let's just kind of open. So what I'll do is I'll pose your questions to our panel, and then they'll respond accordingly. Let me start with the last one that we've actually got from the chat, which is a very interesting question. Probably a question that a lot of people have in their minds as well. And Jean, I'll pose that question to you. And that is, do firms that only provide non-assurance services and that are part of a network also have to have a system of quality control in terms of ISQ M1? So let me repeat that question. Do firms that only provide non-assurance services that are part of a network also have to have a system of quality control or quality management in terms of ISQ M1? Jean?
Thanks, Tandu, and this is very much in the space that I'm operating in exactly. So thank you for that question, and it's a very relevant question. So I'm going to take it firstly of what the standard requires. So obviously the standard requires or is applicable to audit, reviews and related services as according to the ISAs and what the IAASB regulates and relates to. Again, that does not fall within the ambit of, for example, and I'm thinking of non-assurance service like tax or bookkeeping. So it's not compilations, because compilations is regulated in that sense. So if you do compilations, you would then have to apply ISQ 1 in your organization as well. But interesting to your question is the question that you come in if you're part of a network firm. So, and I think that is very important. So obviously your network would determine whether you need to comply with that or not. And again, it is something, this principle of quality management and the quality of your the engagement that you have and what you're delivering being an integrated part and setting the culture of the organization, it's a good thing actually to adapt. It's nice or to adopt. It is best practice. So again, it is not a requirement according with the standard that you need to apply if you do non-assurance services. But again, it depends on your environment with the network firm that you relate to and the type of engagement that you do. So what the question, and I'm going to go elaborate a little bit for, I do apologize for that, but what happens if you do both non-assurance services and then also those professional services that are regulated in an ISMQ 1? So as I mentioned earlier, this is not like a standalone process. It's not something you can do a little bit in isolation. It touches so many of the other components within your organization, whether that's learning and development or whether it's around the human resource element around that, or even marketing. Again, looking at the quality risk of that. So I think it's a natural that it will flow over to your non-assurance services in that regard if you do both of them. I do hope that answers the question. If it doesn't, please pose a follow-up question. Thanks.
The next one now I'll pose to Mari. And Mari, the question is, in the event that a quality risk has a medium rating, are we saying that the judgment we apply must be to reduce the exposure to an acceptable low level?
Thank you, Tanu. Let me just go through the risk ratings again when you do formulate your response. So firstly, we will have our low risks. Then we decide this risk is acceptable for our firm. No response is needed. There is not a reasonable possibility of this risk occurring and adversely affecting our achievement of our quality objective. Then secondly, medium. I think this is where the question comes from. This risk is not acceptable. That we must establish. And you should use your judgment to determine if a response is needed. There is a reasonable possibility of this risk occurring and adversely affecting the achievement of a quality objective. So you don't need formal policies or procedures, but you do need to address this risk. So it might be a practice or just procedures, whatever you do, but that if you decide it's a medium, then you need to justify if you're going to respond to it formally or not, but it does need a response. Where a high risk, this risk is unacceptable. The response is definitely needed, and there is a reasonable possibility of this risk occurring and adversely affecting our achievement of our quality objectives. So I hope that gives a little bit more clarity into what, when you get what response, what you should do. Thanks, Abby.
Thank you, Marie. The next one I'll pose to Yoane. Yoane, the question is, interesting question as well. Will independent assurance be required on the adequacy and effectiveness of a firm's quality assurance risk management process? So do I need to get an independent assurance provider in to actually assess my my processes, risk assessment processes? Joanne?
Thanks, Tandu. So the standard does not require a specific independent consideration, evaluation, or assurance on the system. However, the person or persons that have the ultimate responsibility for the effective operation of the system of quality management needs to perform an annual evaluation and practically almost basically give assurance in this evaluation to say whether or not they believe that the system has been operating effectively or not. So to conclude, no external assurance is required, but a very strong responsibility is placed on the party or parties that take ultimate responsibility for the system of quality management, and that then likely being the CEO or the board of directors of the firm itself.
I see there's a lot of questions coming into our chat. So I'll just pick and choose as they come in. So I see we've got a question from Tabisile, and the question is, will the monitoring of the quality risk register be covered by the monitoring and remediation process? So will the monitoring of the quality risk register be covered by the monitoring and remediation process? So ladies, I'm not sure which one of you want to take that question on. But Joanne, will you give it a shot since you're on screen already? And then I'm happy to open it up to Jean and Marie to also chip in.
Yes, absolutely. So the monitoring will be done as part of the monitoring process. And I think what I particularly like quite a lot about ISQM1 is that before, a lot of emphasis was placed about monitoring of engagement files. So a firm had to monitor that engagement files at the necessary quality, but there wasn't that much emphasis on monitoring the rest of the system of internal control or your quality control manual that your policies and procedures were operating. Whereas now the firm has a responsibility. It's one of the 8 components of the system to monitor that the process is working as it should. So yes, that's part of your monitoring component.
Jean, Marie, is that covered?
Yes, I think it's covered. And I think, sorry, Tanya, just to jump in, I think when this is being dealt with during the monitoring and remediation component that we do in 2023, I think that workshop would really assist with that as well. So stay tuned.
Thanks, John. I'm looking at my own risk registers at the moment. And if I look at my monitoring and remediation risks, that falls under that the processes might not be designed properly and relevant to the firm. So that's one of my risks I already have in my monitoring and remediation component. I don't want to jump the gun to our workshops that's coming, but that will specifically be a risk that you're looking for in your monitoring and remediation section, and you will address your risk there, and you will have your responses, which will filter into your monitoring and remediation process. So I like that everyone is already thinking about how are you going to monitor this, how is risks emanating. So it's good work, guys.
Active group, as we've been saying throughout the workshop. But there's one that Malaika has got for us, which is really kind of taking us back to why all these changes. I know Imran did touch on it briefly in his introduction, but perhaps it might be worthwhile just to kind of take that step back for some of our members who joined a bit later on as well, just to kind of answer the question. So why have we changed from ISQC1 to the new suite of standards that we've got? So Marie, I'll hand it over to you, and again, just allow Jean and Joanne to also chip in.
Tandu, you are really like throwing me under the bus here. So there was a change needed from the ISQC1 approach. That was the tick box exercise, and that we are now moving towards a more risk-based approach. And that we have a whole system of quality management. And it emphasizes on that circle I had, not to stop. This is a continuous process, and to take your monitoring remediation processes into account, and then you will get more risks from there, and you will respond more to that. I did see a question also about, what if I can't implement my response now? You will have a deficiency, and you will note it down as a deficiency, and you will work on it. So that will be a thing that you work on, and it will be continuous. It will part in your risk register. You will say, this is high. You will assess it. The risk won't go away because you can't respond to it now, but it's part of your system of quality management. So I hope someone else also wants to add to that.
Mari, you did such a good job. So I don't think we need to add to that, because I grabbed my implementation guide and just to kind of to get that overall thing.
Thanks. Then we've got another one from Crystal. Jean, I think I'll pose this one to you. And the question is, must all offices in a network have their own risk assessment?
Yeah, so it is very key, because this is at the office level. It's at the office level that you need to do this risk assessment. You can't piggyback on the work that's being done by the network, because there would be unique risks to your office. So that would need to be considered. So in short, the answer is yes. Probably not the answer that you would like to have, but it's very important. So when you're part of a network firm and there's or a network of firms, they will provide you from a group perspective or a network perspective with some risks that you need to respond to and take in consideration as well. But again, you need to go through the same process from your own office perspective to identify those risks and also identify perhaps maybe additional quality objectives if there are any. So I'm kind of going back to the beginning, to kind of identify quality objectives that need to be achieved for your firm specifically that's not be addressed, because it might be from a network that decide, well, that quality objective does not apply to me, and that might be applicable to you, and then go through the whole process. So it is not something that you can just piggyback on other work. And that's also maybe and kind of following up in the sense is no firms will look exactly the same. It is unique to your firm. So you would need to you need to put in the work, you need to go through the process. And there is, if there is a deficiency, you need to determine what would your response be to do that. And it would definitely be based on the scale of, and that's where the scalability comes in, on the size of your firm. If you have the resources, if you've got a dedicated resource of doing it, or as someone that is doing it as part of other work, but also taking in consideration that they have to know about the standard and also have sufficient time allocated to do this. Thanks, Tandu.
Carol Maps has posed a very interesting one there as well. And it's really has to do with the extent of documentation. That's how I'm reading her question. So her question is, what are some of the source documents required for a risk assessment process? I know we've got one document that we provided for our members for this particular workshop. And would a document of that nature suffice, or what else would our members need in terms of the standard? Yone, over to you.
Thanks, Tandu. So in Marie's presentation, she also mentioned a list of sources of information. So maybe just to start and to say, in terms of the documentation that we require, the template that we provided as an example or as a starting point, that's certainly a starting point. So remember that, I think it's the last column in there where we said responses, or maybe the second last column where we said, what are your responses? Some of those responses might require the development of a policy or the development of a specific working paper or specific actions that need to be taken. And so part of your system will involve evidence, which very likely could be documentary evidence of that having been done. So in terms of documentation of your system, of your process, your policies, that could certainly be more. I want to just add something else, which I think might also possibly be included in Carol's question, and that is the source of where do I get information to identify risks. So if I'm now repeating or saying something which you're not asking, Carol, fantastic. Hopefully this will also help somebody else. But you really need to have a very, very open mind when you sit back and you think about what can go wrong in my firm in terms of these quality objectives, in terms of identifying risks. You cannot just go, there is no little shopping list to tick risks. You really need to go and look at everything. And some of the information that we mentioned earlier on was, for example, feedback from a regulatory inspection, maybe feedback from a monitoring inspection that you had, changes in regulatory environments, possibly changes in your clients. If you want to increase your business, if you want to focus on a new industry, perhaps even like in South Africa, we've got the inspections report. For me, from my perspective, I would probably go there and say, what's going wrong in other firms, and what are the chances that those things could be going wrong in my firm? And so there are so many different options of what you can consider for your risk assessment, but then also the example document that we showed for documenting your risk assessment process. Bear in mind that there may very likely be more documents required in order to have a complete system of quality management documented.
Comprehensive answer.
Sorry, Tandu.
Go for it, John. Yeah.
Sorry, and what Yone also mentioned is development of policies, but it might be that you already have existing policies that just need to be updated, or existing documentation. So when you go through that assessment or determining the deficiencies, it's not creating everything from scratch. You might have already existing procedures or processes or documents and policies in place that just need to be updated to address the risk that you have identified. So I just wanted to reiterate that as well. Thanks.
Thanks, John. And then we've got another one from Christelle again. And Christelle is asking if, first of all, he's kind of making a statement. ISQM1 does not have pre-populated quality objectives for risk assessment, as well as monitoring and remediation. So a question is, do firms have to develop their own quality objective with regards to those two elements? Jean, go for it.
Thanks, Tandu. And I think this is what UNA mentioned at the beginning. So we do recognize that the risk is the beginning when we did our little Slido question. So it's to recognize with the House of Quality is that the risk assessment is a process as well as a monitoring remediation is a process. And the standard does not provide quality objectives like we said. So it's kind of this blank. And the idea is, in what the standard says, is you need to go back and determine what would be the quality objectives. You're not required to do that for this. You can do it as part of the other components, or you can do it as a standalone component seated and see what would be the quality objective you would be achieving. And that's why we went through that exercise, identifying a quality objective and also two possible risks that would fall under the risk assessment process. So I do hope that answers your question. So you really need to think and make this whole process your own. It is not the full list. You're supposed to identify if there's any other quality objectives that you think you want to, or do you want to achieve through this process, that you can document them and the risks associated with them. It's only a guideline provided by the standard, at least the minimum that you need to look at, but you are still responsible to have a good look through around that. Thanks, Tandu.
So actually have Candice who wants to ask a question as well. So Candice Answorth from PKF, if you can just come on screen and kind of make the comments that you want to make, as well as pose any questions that you may have to our panelists. Candice, over to you.
Hi, Tanda. I'm not sure if you can see me. Hi,
yes,
ladies. Thank you so much for today. And I do have to admit that I only managed to get on at about 3 o'clock. I had some other meetings that were pre-booked, so apologies and thank you. I guess I'm battling, and I'm sitting here while I was on mute, sort of shouting at my screen, and then Tanda offered me to come on and ask a question. I'm battling with this idea of the three processes. So the risk assessment process, the monitoring and the remediation process, and then the specified response processes. I'm battling with getting into a loop of raising risks on those as well. And, you know, I'm busy going through the first time implementation guidance, and I'm reading it here, as described above, the firm's risk assessment process and the monitoring and remediation process set out specified processes that the firm is required to follow. The remaining components, so those other 6, presumably, those are components which comprise quality objectives the firm is required to establish that form the basis for identifying and assessing quality risks and designing and implementing responses. So while in principle, I understand your risk assessment process may not be as robust as it should be, I guess I'm just battling to go. I'm going to get into this loop of raising risks on my risk assessment process. I was very definitely seeing the risk assessment process as a kind of obtaining an understanding. If I can push it back to some auditing parallels, that was understanding my firm, and I was going to use that understanding to raise risks and design responses. And then I was going to check that I got those right through my monitoring and remediation, not through raising risks on my risk assessment process. But yeah, I mean, I'm open and all ears because I want to get it right. But I'm battling to make the connection. Thanks, Tando. Thank you to the 3 ladies. I'll stay on camera while you answer in case you want to ask me something.
Ladies, who wants to give that a first bash? I know it's a continuous process. I guess some of the questions we can always come back to later sessions and respond in a written format as well. But yeah, Candice has posed a very difficult question. So Joanne, you first on my screen. Any
Thanks,
views?
Tandu. Yes, Tandu, thank you. And Candice, thank you very much for asking this question. actually had quite a robust discussion about this exact point. And in looking at it, you could really actually go and take some of those risks that we've identified and go and put them under some of the other components. For example, to a degree, if I had to do it by myself, I would possibly have done it under governance and leadership, one of the objectives that is already in there. And having consulted with some of the firms, there are some firms who have not identified any additional objectives. And it's possible that they may not necessarily have missed any quality risks. I want to call them significant risks, but that word is not in the standard. So they may not have missed any quality risks, and they may not actually be exposed or needing additional policies or procedures just because they haven't got an identified additional objectives. Or, however, a number of other firms who have identified additional objectives and do then through that process identify the risks, etc. I think it's really going to be different between each different firm. Perhaps the bigger your firm is, the more structures you have. Smaller firms may not have that, or may then actually feel that they want one or want just objective thing.
I mean, Sinead, thanks, and it's nice to talk to you in person because I was chatting to you on LinkedIn this morning. And I can fully appreciate the additional quality objectives against a component where there should be quality objectives. I guess I'm still and you know, I'm happy to be part of a later robust conversation if anybody wants. I'm still sort of battling with the risk against the risk assessment process. I get it can be wrong. I do understand that. And you didn't want to use significant. And I also posed a question about, we talk about ranking these risks as high, medium, or low. And the standard does in the application guidance give you the option to rank risks, but it certainly doesn't talk to a high, medium, or low. And you know, we're busy working with our international network, and part of what we're doing is being asked to rank the risks. And I'm going, you guys are asking me to do more than the standard is perhaps forcing me to do. And I don't want to sound like I'm not working with the standard. I love the standard. I think it's a great change. And to the question of why the change, I think so many reasons. But I think to do more than is required in the first year is maybe a little dangerous, right? Because what does high, medium, low mean? And what does it mean between the 9 firms in my network? And what does it mean between the you know, I don't have a number for the firms in South Africa and beyond. Thank you. Thank you.
Thanks, Candice. If I can just jump in here, the standard definitely does not require to rate your risks. So this is just a method to do it. And the response to your overall question, why do we do risks on risks? For me, and for our firm, it's a component on its own. And what is the risk if you do not do a risk assessment? Who is responsible for the risk assessment? What committees are doing the risk assessment? So you have to put owners to this process. You have to determine what will go wrong if I don't have this process. That is exactly why we've done a quality objective. And the quality objective for my risk assessment process is basically just what the standard requires. It says establish quality objectives and perform your responsibilities in your operating effectiveness. It's the standard objective of my risk assessment process. But I think it's an integral part for our firm to go about your risk assessment, and this will feed into your other components.
Marie, all the things that you considered there in that component, 100% agree that, you know, if I haven't given people responsibility, my risk assessment isn't going to happen, I guess. And it's, yeah, I'm going to speak to our team and go back to it, but yeah, thank you.
Interesting times.
Certainly.
Candice, I might just want to add, maybe not specifically applicable to you, but maybe for the audience of those that's on smaller firms, it would probably be also applicable on the size of the firm. If you're a 1 or a 2 partner, this would be definitely looking a lot different when there's a lot more partners or a lot bigger. So do consider, so we are trying to kind of give a general response to overall, but just for the smaller firms out there taking these considerations, it might be that you won't do this separately and actually have in the separate components like UNA mentioned as well. So it's not really responding to you, Candice, but just kind of highlighting for the others on the call as well.
No, I think also just sharing, we have that range, right? And someone asked the question about the network and the firm and where the responsibility lies. And we have some firms that are two partner firms, right? And their system is going to look very different to some of our bigger firms. So 100% take that comment as well. Thank you so much. Again, thanks, ladies. Thanks, Tando.
Ladies and gentlemen, if anyone else wants to come on, you can just let us know, and then we'll arrange for that. But there's one that we've got as well, and that's really around. We've kept saying throughout the discussion, Joanne, that it's ISQM1 is not a tick boxing exercise. It's not really a compliance exercise, and we need kind of shift from that compliance exercise. But was ISQC1 a compliance exercise? And what do we mean when you're talking about that tick box approach?
Thanks, Tandu. I think from my perspective, I want to start by just adding something to an earlier question as to why did we need to change from ISQC1 to ISQM1? And for me, one of the biggest things that stands out, and we might have mentioned it before, but I want to repeat it if we have, is that before it was control, quality control, and we seem to be reactive. And in addition to that, I want to mention that the standard then required responses, and every single firm who had a quality control manual, if you had one, there are some who hadn't. So if you had one, you had that list of compulsory responses and you stuck to it. Having said that, I spoke to a firm this week, and they had not updated their manual in 3 years, right? So for the last 3 years, their manual had not changed. So my question is, how do you know that you are still current, seeing that the world has changed drastically in the last year? So why quality management then? First of all, we've moved from control to managing, and that indicates a proactive process. So to come back to the question in terms of tick box exercise, before we said, yes, I've got this, yes, I've got this, yes, I've got this. So I just tick, 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 and I potentially felt good about myself and my firm's quality control manual. Whereas now we are saying it has to be a proactive system where I really go and apply my mind and say, yes, there are certain required responses in the standard, but what is really going to drive quality and quality engagements in my firm? What is going to address the risks to quality engagements in my firm? And then proactively, in other words, not reactively, go and implement policies, procedures, responses to that in order to achieve that big objective of having quality objectives at the end of the day. So no more just saying, I have ticked all the boxes and I'm okay, but actually saying, in addition to just checking boxes or ticking boxes, am I actually achieving the objective of the standard? So I hope that clarifies it somewhat without coming across too strong.
Thanks, Joanne. Scrolling through some of the questions that we've got. I think the one that Ashagre has raised, I think probably needs a bit more context. So Ashagre, I'm not sure if you do want to come on screen and just pose that question to our panel. Would you be comfortable doing that? Or even if you just kind of raise it through audio as well without coming on screen. But we would like to see you and engage with you. All right. All right. She's saying she's truly satisfied, so no need to come on screen then. So we'll kind of keep that question and probably just engage with you a bit further on to get a bit more context around that. But ladies and gentlemen, no more questions that I'm picking up on the chat. Michelle, you'll help me if I missed anything. You're welcome to just come on screen as well as pose any questions that I may have missed on my side.
Thank you, Tando. I'm just quickly checking. No, that was my last question as well about the ticking the box exercise.
Thank you very much. I think that was okay. I thought I heard someone, but I think that was really a very good start to our series. I hope you know more about the risk assessment process. We definitely are welcome. You're welcome to kind of pose any other questions via email. We've got our website as well, where you can access all of the resources that we referred to earlier on. But a really big thank you to our panelists. As you can see, like I said in the beginning, they're very they dynamite. If I look at their understanding of the QM standards, and we really do look forward to engaging with them later on in the series as well. But other than that, in terms of looking forward to the next workshop, we will be communicating the next dates for that particular workshop. We will also be kind of preparing written responses to some of the questions that you've posed as well. We've captured your responses to the Slido questions, and those responses will really go a long way in terms of determining our next step from our side in terms of areas that we need to address further through the workshop and also through our webinars. But thank you very much. I hope you enjoyed the rest of your afternoon. And as Alta said in the beginning, do stay interested and do attend the next workshops as well. So have a great afternoon, ladies and gentlemen. See you next time. Cheers.
Let's draft a set of financial statements in 5 minutes with Draftworx Cloud. So where do we begin? We begin by adding a new client. So we specify my client name, the type of framework that's applicable. In this example, IFRS SME for companies. The type of assurance engagement is going to be backed by the working papers that we do. In this example, compilation. Ensure that the tax year is correct and add client. Draftworx will then take the credits for the applicable framework and working papers off my balance and create my entity for me. It then jumps us in and we present it with a shortcut list for what we need to complete to get my first draft of financial statements out. So first step is client setup, and client setup is where we store all the information about our client. If there's anything not applicable, such as trading is, leave it out. It won't go through to my financials. And we're going to put in all the information about my client, business address, registration number, place of signature, and again, anything that's not applicable or that you don't wish to go through to the financial statements, just leave it out. Directors, shareholders, if we were doing a different type of entity, this may change accordingly. And then lastly, the number of years to present. Well, if you're doing a standard set of financial statements, you'd have your current and your prior. If you're doing a brand new entity, you'd have 1 year, prior period error 3, or a management style pack with 5. Okay, select that. Let's jump back to startup and we can go into our next step, which is capturing our TB. So capture TB. This is where we're going to import our TB from our accounting packages or from Excel. With Draftworx, we have something fantastic called Sync,